Hello everyone, welcome to EduTap and welcome to the Finance 360-degree session. So today we are going to discuss a very important topic that many of you were demanding that I should bring this session. So the Reserve Bank of India has released a press release regarding the steps to encourage the use of the INR for the international trade for the cross-border transactions. Okay, so we will discuss that what are the changes that has happened in the FEMA regulations, as well as we will discuss that what are the steps taken by the Reserve Bank of India to encourage the use of rupee for the cross-border transactions. Okay, so this we are going to discuss in today's session. So do tell me that if I am clearly audible and visible. I hope there is no glitch, there is no problem that is coming. Okay, so now let's get started, but before that, do subscribe to the YouTube channel of EduTap and join our Telegram channel for the PDF of this session. So you will get the PDF of this session in the Telegram channel, and the link for the Telegram channel is provided in the description box below. Okay, now this session is going to be important from your RBI examination, from your NABARD and the SEBI perspective also, because here we are going to discuss about the steps to encourage the use of Indian rupee and the local or national currencies for settlement of cross-border transactions. Okay, so what are the steps taken by RBI to encourage the use of rupee and the local national currencies? Okay, so first of all, to encourage the greater use of Indian rupees for the trade transactions, in July 2022, an additional arrangement in the form of special rupee was-through account was introduced. So I hope you remember that in July 2022, there was the discussion and there was the introduction of the special rupee was-through account. Okay, and the Reserve Bank of India had released these guidelines that was regarding international trade settlement in Indian rupees, and from there the concept actually originated that the RBI is trying to promote the Indian rupees for the international trade, for the the RBI is focusing on the internationalization of the Indian rupee so that the cross-border transactions can happen in the Indian rupees. And this circular, this notification was brought by the RBI on July 11th, 2022. Okay, so in July 2022, there was the notification, the circular that was released by RBI regarding the international trade settlement in Indian rupees. From there, the concept of internationalization of Indian rupee originated. Okay, that we have to internationalize the Indian rupee. Now, how many of you actually know about the special rupee was-through account? So this guidelines or this circular talked about the special rupee was-through account. So in these guidelines, it was said that the settlement of trade transactions with any country, if that is happening, the authorized dealer bank in India, they can open special rupee was-through account of correspondent bank. So what happens that, let's say there is a bank of Germany. Okay, now it is opening now there is a bank of Germany, let's say XYZ. Let's say it is opening a account with the Indian bank SBI, State Bank of India in India. Okay, and this account is opened in the international, like in the INR, that is in the Indian rupees. And this account, what happens that the importers of our country, the importers of India, they will pay for the import that they are doing from Germany. Let's say we are buying the cars from Germany. So for the imports that we are doing of the cars, we are paying in the Indian rupees, and these Indian rupees are going to the account of this is the account of the German bank, and the German bank, this INR is going in the account of the German bank, and this money, like the money is going to the German exporters in the German currency only. Okay, while this Indian rupees is kept in this account, and when, let's say, the exporters of our country, they are exporting mobile phones, or let's say we are exporting wheat to Germany, and so the Germany is using the INR in this account to pay for the exporters of our country. So this was the basic idea. That is, under the special rupee was-through account, it was allowed that the foreign banks, they can open their account in the Indian bank. Okay, and this account is actually the special rupee was-through account, in which the importers of our country, the importers of our country, they will pay in the Indian rupees, and this Indian rupees will be kept in this account that can be used for the investment in our country, and this rupees can be used for paying to the exporters of our country. So you can understand that instead of using dollars, instead of using the dollars, we said that we will promote the usage of INR for the cross-border transactions, because right now what we do, that let's say the foreigners and the Indians are trading, the German exporters or the German importers and the Indian exporters or the Indian importers, they are trading with each other. So usually the Indian exporters, they get dollars for the trade, like for the sale that they are doing, or the Indian importers, they have to pay in dollars. So Indian importers, they have to convert their rupees into dollars and they have to pay to the German exporters. And let's say the German importers, they have to convert their German currency into dollars and they have to pay to the Indian exporters. So there is the conversion that was required. A lot of conversion was happening from the domestic currency to the dollars and dollars to the domestic currency. So to stop this conversion, to stop this process and to reduce the usage of dollars, because dollars was becoming, and dollar is becoming very, very powerful. So there was the concept of special rupee Vostro account, that the foreign banks can open their account in the Indian bank, and the INR that will be kept in this Indian bank, in this account, that INR can be used to pay the exporters or to do the investment in India. Okay, so this was the idea. So here I hope you understand that for the settlement of trade transactions with any country, the authorized dealer bank in India, so the banks that have the permission from RBI to do the conversion of currency, so the authorized dealer bank in India, they can open special rupee Vostro accounts of the correspondent bank of the partner trading country. So let's say it can be a German bank, it can be a Russian bank and such. In order to allow settlement of international trade transaction through this arrangement, it has been decided that the Indian importers that are importing from, let's say, a Russian exporter, okay, Indian importers, they are importing, let's say, some product, mobile phones, let's say, from the Russian exporter. So they will pay in the INR, and this INR will be stored in the special Vostro account of the Russian bank, and then this INR can be used by the Russian bank. This INR can be used to pay the Indian exporters that are exporting to the Russia, and this INR can be used for the investment purposes also. So Indian importers undertaking imports through this mechanism shall make payments in INR. So the Indian importers, rather than making payments in dollars, they will make payments in INR only. So we will not be required to use the dollars. Russia also will not be required to use the dollars. So Indian importers undertaking imports, they can pay in INR, which shall be credited, which shall be going to the special Vostro account of the correspondent bank of the partner country against the invoices for the supply of goods and services. So basically Indian importers can pay in the INR rather than paying in the dollars to the special Vostro account. Now Indian exporters, they will get the money. Indian exporters, they will get the proceeds in INR from this Vostro account, of the correspondent bank. So I hope this is very much clear that the special rupee Vostro account, this was introduced under the guidelines that were released in July 2022, and from there the idea of internationalization of rupees started. From there the idea of using the rupees for the cross-border payments started. And actually there are several foreign banks that have since opened their special rupee Vostro accounts with the banks in India. So 22 countries opened special bank accounts in India to trade in, like to do the cross-border transactions in rupee. So there are multiple different banks, there are multiple different foreign banks that have opened their special rupee Vostro account with India. And special rupee Vostro account, why this is special? Because this is particularly for the settlement of trade transactions. Okay, so this special rupee Vostro account is special because it is opened specifically to settle the trade transactions, specifically to settle the export and import transactions. Okay, so this is the basic idea of special rupee Vostro account, and slowly this idea is becoming popular. Now, there are further steps that the RBI has taken to popularize the use of INR and the local or national currencies. So, the Reserve Bank of India has also signed MOUs, the Memorandum of Understanding, with the central banks of UAE, Indonesia, and Maldives to encourage the cross-border transaction in the local currencies. Okay, so it has been said that rather than using the dollars, because let's say Indian importer want to pay like rupees 1 lakh has to pay rupees 1 lakh for the imports. So the 1 lakh will be converted into dollar. Then the, let's say, UAE exporter will get this money. Then the exporter will convert this dollars into the UAE currency. So a lot of conversion is required when we use the dollars. So rather than using the dollars, we can use our local currency. It will reduce the transaction cost because conversion will not be required then a lot. Okay, so further, in December 2023, the foreign exchange management, manner of receipt and payment regulations, they were revised to enable the cross-border transactions in all foreign currencies, including the local currencies of trading partner countries and INR. So the foreign exchange management regulations, they were updated, they were revised so that we can use the local currencies for the cross-border transactions, and we can use the INR for the cross-border transaction. So remember that before there was hefty usage of dollars for the cross-border transaction, but now we are focusing on encouraging the use of Indian rupee and the local or national currencies for the trade transactions. Okay, so we are trying to reduce the usage of dollars, because as the demand of dollars decreases, the price of dollars or the value of dollars also decreases. So the dollar that is becoming so strong, that is appreciating so much right now, if we reduce the usage of dollars, its power, its value, its price will decrease. And that's why the president of US is so afraid and is saying that we will put tariff if you try to not use dollars. Okay, so you can understand that we are trying to not use dollars, we are trying to reduce the usage of dollars, because the less demand for dollars lead to less price and less value of dollars. Any confusion anyone has till now? Any confusion anyone? So now we will discuss some changes that has happened in the Foreign Exchange Management Act regulations, so that there is the promotion of the usage of INR as well as the local currencies or the national currencies for the cross-border transactions. Any confusion? Yes, of course, the Vostro account is the opposite of Nostro account. Clear? Okay. So we have discussed that there is the special rupee Vostro account that was introduced in July 2022, so that we can use the INR for the cross-border transaction. The MOUs have been signed between India and the UAE, Maldives and such, so that there is the local currencies that can be used for the cross-border transactions. Now coming to further changes in FEMA regulations, and in order to promote the cross-border transactions in the Indian rupees and the local or national currencies, a further review of the existing regulations has been issued under FEMA 1999. So the FEMA regulations, the Foreign Exchange Management Act regulations, they have been further reviewed, and the RBI, in consultation with the central government, there is the changes that has been made and the amendments that have been brought in the FEMA regulation. So accordingly, the following changes have been made in the existing FEMA regulations. So first of all, it has been said that the overseas branches of authorized dealer banks, let's say the State Bank of India has got the permission from the Reserve Bank of India to work as the authorized dealer category 1. Okay. Now, authorized dealer category 1 means that State Bank of India, it can convert the rupee into any other currency and any other currency into rupees for the capital and current account transactions. Now, the capital account transaction and the current account transactions. So, current account transactions means trade in goods, trade in services, as well as the transfer payments such as gifts, remittances. Let's say you want to send money to your relative or to your sibling who is living in US, so you are sending the money outside, or the NRIs, the non-resident Indians, they are sending the money to India for, like, the money comes from Singapore, Dubai and many other countries, right? So the current account transactions means the trade in goods, the trade in services, the transfer payments. For that, the rupee has to be converted into the other currencies. Okay, let's say you want to buy iPhone, so rupee is being converted into dollar. Let's say you are selling wheat, the exporters are selling wheat, or they are selling rice, or they are selling tomato ketchup. So they are getting the different currencies. They are getting euro, they are getting dollars. So dollars or euro have to be converted into rupees. Okay, so these are the current account transaction: trade in goods, trade in services, and transfer payments, the remittances, gifts, and such. Capital account transaction means the investment. We are doing the foreign direct investment in other countries. We are doing the portfolio investment in other countries. The other countries are doing the foreign direct investment in our country. Apple has opened its store. There are many subsidiaries of the different banks around the world that has been opened in our country. So FDI is coming into our country. The foreign portfolio investment is coming into our country. So investment is happening at the cross-border level. Then there is the external borrowings. So we borrow from outside, the outsiders borrow from our country. External assistance is also provided to our country, or we provide the external assistance to the countries that are in need. Okay, so these are the current account, these are the permissible current and capital account transactions that happen at the cross-border level. Okay, now the State Bank of India, let's say it is an authorized dealer category 1 bank. So authorized dealer banks, they are allowed to convert the rupees into other currencies and other currencies into rupee for the permissible current and capital account transaction. Now it has been said that the overseas branches of authorized dealer banks, let's say SBI has a branch in UK, SBI has a branch in US. So the overseas branches, let's say the State Bank of India has a branch in Sri Lanka. The State Bank of India has a branch in Nepal. The State Bank of India, let's say, has a branch in Sudan, okay, or any other African country. So overseas branches of authorized dealer bank will be able to open INR accounts for a person resident outside India. So that means if the State Bank of India has a branch in Sri Lanka, so this overseas branch of the authorized dealer bank of the Bank of India will be able to open the INR account for the citizen of Sri Lanka, for the resident of Sri Lanka. Okay, so this is the basic idea, that the overseas branches of authorized dealer bank will be able to open INR accounts for a person resident outside India. Now this account for the person resident outside India, this account and the money in this account can be used for settlement of all permissible capital and current account transactions. That means if there is someone that is living in UAE, if there is someone that is living in Sri Lanka, so they have, and the State Bank of India or the PNB or the ICICI Bank, they have branches in these countries and they have opened the INR account for the citizens of these countries. So they will be able to send, the money to India for the export from India. Let's say export has happened from India, so they will the proceeds can be sent in the INR. Okay, the proceeds or the money we can receive it in INR. Okay, so this is the basic idea, that for the settlement of all permissible current and capital account transaction with the person resident in India, these INR accounts can be used for the settlement. Okay, so the Sri Lankan citizens or the UAE citizens, let's say they have the INR account that is opened with the overseas branch of the authorized dealer bank. So this INR account can be used to pay to India. These INR accounts can be used to pay to India. Now for this, the FEMA regulation has been updated. So the Foreign Exchange Management Deposit 5th Amendment Regulation 2025. So as per the amendment that has happened, a person resident outside India having business interest in India, that means they are doing some capital account transaction, like they are doing FDI, foreign portfolio investment, or they are borrowing from India, or they are lending to India, or they are doing the trade with India, they are doing the remittances to India. So they have any business interest in India, they may open a special non-resident rupee account. So INR account that is opened by the non-residents. So that is special non-resident rupee account. And why it is special? Because it is for those people that have some interest, business interest in India. Okay, so the person resident outside India, if they have the business interest in India, they can open the special non-resident rupee account with an authorized dealer of India that has the branch overseas. Okay, for the purpose of putting through permissible, for the settlement of all permissible current and capital account transactions with a person resident in India. So this is the first change in FEMA regulation, so that there is more usage of INR that can happen. Next is Indian exporters. The Indian exporters will be able to open accounts in any foreign in any foreign currency overseas. Because let's say we are trading with Sri Lanka, and Sri Lanka is saying that rather than using the dollars, the Sri Lankan exporters, they will be ready to take the INR, or the Indian exporters, they should take the Sri Lankan currency and such. Okay, so Indian exporters will be able, so rather than using the dollars, it is said that we should use the local currency. Okay, so Indian exporters, they will be able to open accounts in any foreign currency overseas for settlement of trade transactions, including receiving export proceeds. So let's say Indian exporters, they are exporting wheat or they are exporting rice. So they will be able to receive the proceeds, they will be able to receive the money in the foreign currency, and they can use this foreign currency. Let's say Indian exporters, they are also buying something from Sri Lanka. They are buying, let's say, laptops from Sri Lanka. Okay, so this foreign currency that they have received for the export, this money can be used to pay to Sri Lanka for the laptops that are being imported by this, or there is some machine that is being imported by this Indian exporter. So Indian exporters, they will be able to open accounts in any foreign currency overseas for settlement of trade transactions, including receiving export proceeds, receiving the export payments, and using these payments to pay for the imports that are happening from that particular country. Okay, so this is the idea, because we want to promote INR, but we also want to promote the other local or national currencies. Otherwise, the other countries will not want to use INR if we are not trying to promote their currencies also, right? So the basic idea is that the FEMA regulations have been updated in regards to foreign currency accounts by a person resident in India. So a person resident in India, being an exporter, particularly exporter, they can open, hold and maintain a foreign currency account with a bank outside India for realization, for taking the export payments, for getting the export payments and advance remittance received by the exporter. Okay, like taking the payments for the export, and this money can be used for paying the imports. This money can be used for paying for the imports. Okay, so this is the basic idea. Now coming to the next points. So person resident outside India will be able, now person resident outside India, they will be able to settle bona fide transactions. Bona fide transactions are the allowed transactions. Okay, they are the transactions that are happening in good faith. That means they are the transactions that are not related to fraud, that are not related to deception. So if the person resident outside India, they want to settle the trades, or they want to settle the bona fide transactions with other person resident outside India using the balances in their repatriable INR accounts, such as special non-resident rupee account and SRVA, they can do so. That means, see, before it was said that the INR accounts, these accounts can, like, the money can be used by the, so person resident outside India, they can open the INR accounts, and this money can be used to pay or to get the money from the person resident in India. So person resident outside India, they can open the INR accounts to trade with person resident in India. Now it is said that if the person resident outside India, they want to trade with other person resident outside India. Okay, like let's say there is a Sri Lanka and there is Nepal. These both countries, their currency is weaker than Indian currency, we can say. Okay, so let's say they want to trade in INR. These countries, or let's say their exporters or importers, they want to trade in INR. So the person resident outside India will be able to settle the bona fide transactions, that means allowed transactions, with other person resident outside India using the balances in their repatriable INR accounts. So using the balances in such INR accounts that are allowed to, like, withdraw the money to their home currency. Okay, that is the money that is kept in the special non-resident rupee account or the special rupee Vostro account. So the money that is kept in the special rupee Vostro account, so there is some INR that is left in the special rupee Vostro account, or let's say in the special non-resident rupee account, there is some INR left. So this INR can be used for trading in between two other countries. Okay, so this is the idea. Now person resident outside India will be able to use their balances will be able to use their balances that is held in repatriable INR accounts. Let's say in the special rupee Vostro account or in the special non-resident rupee account, there are some INR amounts that is left. So they can use these money to invest, to do the foreign direct investment in India, or they can use this money to do the non-debt investment in India. That means they can invest this money, this INR that is left in their accounts, they can use this money to invest in India in the foreign direct investment or in the equity, that is in the non-debt instrument. So this is the idea. Not repatriable INR accounts means these are the Indian rupee bank accounts. These are the Indian rupee bank accounts. That means the bank accounts which is keeping INR held by NRIs, held by the non-resident Indians, where they can deposit money and later withdraw the money to their home currency. Okay, so person resident outside India will be able to settle the bona fide transaction with other person resident outside India using the balances in their repatriable INR accounts, that is the SRVA or the special non-resident rupee account, as well as person resident outside India will be able to use the balances in these repatriable accounts to invest in India in the foreign direct investment or in the equity instruments. So these are some of the updates that has happened in the FEMA regulations. So these are the steps that are taken by the RBI to encourage the use of Indian rupee and the local or national currencies for the settlement of cross-border transactions. Any confusion anyone has? Is this clear? Any confusion anyone? So basically for the internationalization of rupee or for the usage of the rupee for the cross-border transactions, the RBI is taking various steps. So these are some of the steps. Okay. So this is the question. I hope you will be able to answer this question. So accordingly, which of the following changes have been made in the existing FEMA regulations, that you have to tell me. So just try to answer this question. And this is it for today. Thank you everyone. Thank you for joining. I hope there is no query. Anyone? Any query? Any confusion anyone has? All clear? Okay. Okay, then thank you everyone. Thank you for joining. If there is any confusion, you can comment down below so that I can see your confusion and I can answer to you. Do give the right answer of the homework question, and the whoever has given the right answer, I will comment down below that okay, this is the right answer, so that you know that which is the right answer and which is not. Okay. See, debt instrument, if we talk about the debt instrument, they are related to borrowings. So if some other country is giving a lot of money for the borrowing and there is any you can understand that, see, debt is a kind of instrument that is very risky when it comes to, let's say, corporates are taking debt. So through this, the hawala money or the black money can be like, let's say the corporate has given the money, corporate in donations has given the money to some Sri Lankan NGO. Now this NGO has sent the money to some, the NGO has sent this money to some other company, and through that company the investment is happening in the debt instrument. And later on the corporate will say that okay, we are not able to return the money and we are going bankrupt. So and this corporate, it was paper company. Okay, so in this way the hawala money or the black money can be transcended. Okay, rather than when it comes to equity or shares, the shares value depend upon the market. Okay, so in this case the paper companies will have no value, because the paper companies, the retail investors, the foreign investors, they will not trust the paper companies or the very small companies. So those companies' value will not be much. So much money could not be transcended, right? So to safeguard this, yes. See, repatriable INR accounts, see, bona fide transactions, they are the transactions that are happening in good faith. That means these transactions, they do not involve any fraud, they do not involve any deception. So bona fide transactions are the allowed transactions. That means these transactions, they do not involve the black money, they do not involve any money laundering or such. Okay, repatriable INR accounts means these are the Indian rupee bank accounts held by NRIs who are depositing. So let's say the non-resident Indians, they are depositing the money in an account, that is the INR account, and they are allowed to take this money out, and they are allowed to take this money back to their country. So that is repatriable INR account. Repatriable means that the money that is stored in the bank account in the Indian rupees, that can be taken out to their own country. So let's say the US citizens, the US residents, they are depositing in the INR accounts, so they can take the money out and they can take this money back to their country. That is repatriable INR accounts. Okay, bona fide, whichever is not involving the blank money, whichever is not involving any money laundering, so that is bona fide transaction. Simply, they are carried out in good faith. Any other confusion? So person resident outside India will be able to settle their bona fide transactions, that is happening in good faith, with other person resident outside India using the balances in their repatriable INR accounts, that is the INR accounts from which the money can be taken out to the other country, such as special non-rupee rupee account and the non-resident rupee account, or the special rupee Vostro account. Okay. Any other confusion? Jayant, is it clear? So this is it. This is the idea of the news. If there is still any confusion, do ask me in the comment section. Thank you everyone. Thank you for joining.